Good afternoon, everyone. Welcome to Options Brew TV, Market Shot with Mark Phillips of Harvested Financial. Hello, Mark. Welcome. How are you?
Hello, Lex. I'm doing very well, thank you. How are you?
I'm doing well. I'm braving the 25 inches of snow I think we have in Chicagoland. It's unreal.
It's not even a surprise to wake up to see another 2 inches on the ground.
I know
Right?
it's snowing right now. I love it though. I love it until about, let's say, April. Then I'm done.
Exactly. Well, given the way we've got these piles out here, I think it's going to be at least April before this melts.
I know, it's crazy. Well, good to see you. Welcome. What's on your mind, Mark? You're the master of all these unbelievable spreads. What are you thinking about today?
Yeah, well, I was looking at the name MicroStrategies. And so MSTR is the ticker out there. And they've been all over the headlines. The last 2 months, everyone's just been, fawning over Michael Saylor and what he's doing with adding Bitcoin to the balance sheet. And the most recent news was the fact that he took out a loan. I believe he originally was going to issue $700 million worth of debt. And it was so oversubscribed that he's actually going to put out $1 billion worth of debt at a 0% interest rate to buy more Bitcoin and add more Bitcoin to his balance sheet.
Jeez.
So the capital markets are such right now that you can raise $1 billion at 0% interest just to buy Bitcoin.
That's incredible. That's crazy. So I'm trying to get a Bitcoin quote here. I think didn't it eclipse 50,000 or some number, or even high? And it's 51,870 right now.
It's been pushing 52,000. I think it crossed over 50 earlier this week.
Yep.
Amidst all this kind of institutional news, people like Michael Saylor communicating this sort of treasury strategy. He actually has what he calls his playbook for other corporates. Elon Musk, of course, getting involved with Tesla there. A funny fact, I saw that Tesla has made more money on their Bitcoin purchase just in the last couple of weeks than they made all last year selling cars.
Oh my God. That's unreal. That's unreal. The
It's
Tesla hedge fund.
It's becoming that, and I mean, it's becoming the MicroStrategy's Bitcoin, proxy, and it's something like 30% of the market cap of MicroStrategies is purely due to its Bitcoin position.
Wow, that's amazing. That's amazing. Do you have any Bitcoins?
I do.
You do? Don't you have to mine them somehow? Is there a little trick to that?
I did it the old-fashioned way that a trader does, and you go onto an exchange and say, "I'll pay the offer." So no, I have not gotten into the mining or anything, but
okay,
it's a crazy, interesting world out there. For market structure geeks, like what's going on with all these different exchanges, and it's fascinating.
That's awesome. All right, well, what's your play today? What should we look at in this stock?
Yeah, so it's a $900 stock right now. I think it's something like tripled in the last 6 months.
Mm-hmm.
So that's a really expensive stock to get into. But what I want to compose here is a little bit of a combination put spread, call spread that gives you the kind of benefits of being long the stock with a really defined exposure. And I think some of the pricing is going to present a pretty interesting scenario for doing that. So I can just jump in and pull up my trade hawk and show you all what I'm thinking about.
Let's do it. Let's do it.
Here we go. So, I'm looking out to March right now. So I'm looking at the March 19th expiration, regular serial expiration. Right now, MicroStrategies is trading around $910.
Okay.
And so what I'm going to do is, in order to sort of synthetically get long the stock, we're going to sell a put spread and we're going to buy a call spread. And we're going to use the funds that we collected from selling the put spread to fund buying that call spread.
So 2 long delta bullish strategies, correct?
Exactly. 2 long delta bullish strategies that can be achieved for, well, we'll see the prices, but you're actually going to get a credit on this trade.
Okay, wow, that's great. So you do more than pay for it. You get something for it, right?
You actually get something to have this, and we'll see. It looks very much like being synthetically long the stock.
Awesome. Okay, let's have a look.
Yeah, so we're trading right around 910. So I'm going to do 2 spreads that are about $50 away from the current stock price.
Mm-hmm.
So let's sell, 910. Let's sell the 860 put. So we're going to sell the 860 put to buy the 810 put. So $50 spread, about $50 away from at the money right now.
Okay, got it.
This is trading around, midpoint is $24 right here.
Yep, almost 25 even. Yeah, okay.
Yeah, these are wide markets, so definitely, we have $6 on the one leg and you
Yep.
have, almost $8 on the other leg. So this is a wide spread, but midpoint right around that 24-25 level.
Right. Got it.
So now we have 24, $25 to play with right here. But if we go a symmetrical distance, so, let's get long the 960 and sell the 1010, that spread itself is actually only trading around $14 at the midpoint, which
Mhm.
24 and change minus 14 and change, that gives us that credit. That gives us that almost $10 credit here at the
Right.
midpoint of these two
And
spreads.
here it is right there. So that 1055 credit is what this combination of four legs produces of this. And you're calling it, it's like a synthetic long stock when we look at the, I'm assuming we're going to look at the graph.
Yeah, I think it's a perfect way to look at this
Yep.
is to,
Yeah, get some range there. We need a lot of range here, don't we? Jeez.
yeah, probably even need more than that, huh? So this will show you that sort of, I can even go bigger in it all.
Yep.
These big handles there.
Oh my
There's a
gosh.
wide
Yeah.
range of outcomes that you want to look
Right,
at.
right.
So what this sort of flat line is here, right in the middle, where we're seeing those 991s, that's the $10 in change that you're going to get from collecting the credit on initiation of this.
Okay.
So anywhere between our short put spread strike and our long call spread strike, those two closest to the money strikes, we're going to collect that premium.
Right.
So we have almost $100 range where we're collecting $10 a contract about. If stock starts going up, above that 960 level, our long call kicks in. That's when we really start to act like, a long stockholder here.
Yep.
And we make up to the $50 max value of that spread from the 960 to 1010. We're going to make the $50 plus the credit we received to put on the trade.
Right.
So, that's almost a $6,000 gain above that 1010 level.
Okay. Right. And you can see that on the graph in here. I don't know if you want to draw or not, but Mark's talking about way up here, right?
All the way up there,
Yep.
exactly.
Okay, good.
And so your gains are, so unlike a long equity position, your gains are capped above a certain level
Right.
because you have sold that 1010 call, above that level, that's where why it's going to flatline here like that.
Right. And you like this spread, I'm assuming, because even with a little bit of nothingness, which what I'm calling this is the nothingness, sort of, right? You got a nice range there. You're still going to make some money, right? So
Exactly.
we still have a chance to make some money with not the big move that we like. The pricing works out so that we get this nice big $10 credit. Really nice, huh?
It's a nice $10 credit over about $100 range for the equity price, $50 north and $50 south, where it stays in that range, you just collect your credit.
Right.
But the credit also works in our favor because it skews the upside downside here a little bit, in the sense that our max gain is that almost $6,000 number, and our max loss is going to be the max value of that short put spread, which same $50 difference minus the credit we received. So it would be $40 per share, $4,000 per contract.
Right. Perfect. Makes sense. I like it. Okay.
So,
yeah, you've talked about this stock before, I think, haven't you?
And I think when we talked about it before, it was only trading in the 300s.
Is that right?
Yes.
I hope you suggested a long spread or something that was long back at 300.
So I'm certain the options that we were talking about expired then, but it was, when Bitcoin was going on another one of its tears, we sort of did some analysis thinking about the percent of market cap that MicroStrategy has holding in Bitcoin, and we did a sort of broken wing butterfly. It was skewed to the upside here.
Nice. I think I remember now. I do. Very cool. All right.
Yeah, another synthetic long, with a nice defined risk play, but that positive premium capture that you get here really does some nice things and presents, what I think is an interesting asymmetry for someone who's bullish on a stock like this.
Perfect. I love it. Okay, we'll come back and look at this one at another time. So maybe, a week might not be enough. What was the term again? I forgot. Was it March?
Yep, March. So this is going out to the March. So it's almost exactly a month that we have.
Yeah. So we have a month to kind of look at this. So on one of the next couple episodes, we'll have a peek at this, see how we're doing.
Definitely.